Hello, my name is Phil. I might have spoken to a lot of you already. I am one of the business relations officer of Chicago DealVault. So unfortunately, Hugo might not be able to join the webinar today. And please allow me to start the meeting and introduce our guest speakers today. So our webinar is about finance and funding, and we have three guest speakers. So our first guest speaker is, of course, one of the members of Chicago DealVault. He is a guy from Mastery, so he also lends funds for Mastery students. We have here Dr. Ali Said, Dr. Said Ali, as well as our second guest speaker is the principal of Albica Financial. He is also one of the go-to guy of Chicago DealVault and members in terms of loans and other services. Friends, let us welcome as well Sir Vincent Pace. And lastly, we have Karen from Homebridge Financial Services and in behalf of Sir Juan Loya. So let us first hear from Dr. Said. Dr. Said,
Hello.
hello.
Hi. Can you hear me?
Yeah, we can hear you.
Yeah. So what would you like me to talk about?
Yeah, about your experience with Chicago DealVault, being one of our private lenders, as well as with how you are able to help those who are on the line.
Well, actually, I'm not a member of Chicago Deal Vault, although I've been invited as a guest from time to time. The situation is that, bear with me for 1 second. I'm sorry. I'm going to turn off this speaker here. So I am a private money lender. I belong to Mastery, and actually, Andrew Holmes and Rahul Visal are my mentors and my gurus. And as a private money lender, I'm approached from members from Mastery to lend to them. Their typical loan is anywhere from about 85 to about 150,000, and there are about 2 points at the loan initiation fee. The loan is typically for 6 months, and the interest rate is about 12%, which would be 1% per month. And the how I proceed with this is that a borrower would approach me, and we chat typically these days on the Zoom to try to understand, if we haven't met already, to review what their experience has been with real estate, what type of background do they have, how much time can they commit to their project, how well are they informed about the project that they're going to be getting into, and so on and so forth. Often at times, I'm also interested in reviewing the comps. Actually, all the time, we go over a whole set of documentation in the form of comms, in the form of the ARV, how are they approaching their exit strategy, whether it's going to be a flip or a cash flow, and also what are the rehab figures like, how accurate are they. So in other words, the purchase price and the rehab figures, those are the total, that is the total amount that we lend on, 100%. And so that's basically how I proceed with my private money lending situation. I'll be open to any questions if any of the audience or anybody wants to ask of me. I'll be happy to address any questions that they have.
Oh, Dr. Said, if ever they wanted to reach out to you, how will they be able to do that?
Yeah, so I can post my information on the. Is there a chat area here that I can? I'm trying to figure out. Um,
Yes, there's a chat.
okay, so there we go. Okay, so I see that. So I'm going to post that message over here with my name and my email address and my cell phone. Okay, anything else or any other questions? Because I can keep on speaking otherwise, and I want to address whatever questions they might have or any other information. Hello, Tasha. How are you? I
Hello,
think it
Dr.
seems Tasha
Ali.
Norris over there.
How are you, Dr.
Good, good.
Ali?
So Tasha, you're borrowing from me, and can you give a 2 minute just discussion about your experience with how we have proceeded and what we have done?
Yes. So, I had a property, off-market property under contract, that I wanted to get funded for. So I presented the information to Dr. Raul with the comps, with my scope of work and what I wanted to do with the project. He looked it over. He came out to the property to look at it as well to make sure that the numbers and everything made sense, as far as moving along with the project, as well as, like he said, we discussed the points, the 2 points, and the 12% interest. Um, and we've just been working through trying to get to closing on it now. Dr. Ali has worked pretty diligent hand in hand with me to make sure that the project is going smoothly and getting to close. Um, so that's pretty much how the process has worked thus far. And his knowledge, because this was kind of a different off-market property for me, but his knowledge of some things that I was kind of not aware of. Like the property is in Indiana. So I had to have my business registered in Indiana in order to be able to conduct business under my business name. So he helped me along with that. So his knowledge, his previous knowledge of real estate has actually really helped a lot along in this process. We haven't made it to closing yet, but that's pretty much how the process has been going.
Well, to add to that, and thank you so much, Tasha, for filling in. To add to that, I consider my role when I'm um, in the position of a private money lender. I consider my role as also trying to ensure as much as possible that it is a win-win situation, and my borrower actually ends up um, definitely having a great deal and a great investment for themselves. It's not just me passively sitting and just collecting the interest. It's also wanting to make sure that the borrower is going to have uh, a, a, a very good, profitable experience from the whole situation of their project itself.
And that second set of eyes there for me is really a huge, it's a great piece, I feel like. Because there's somebody else that's looking over the deal. He was able to look over the deal, come to the house, look at the house, and really make sure that what I was getting into would be, a profitable deal for me. And that's a huge piece.
So I'm seeing some messages here. Do you exclusively lend work with mastery participants only? The answer is yes, for many reasons, including the fact that when I belong to a group called Mastery, we have a certain level of understanding amongst ourselves. We have certain guidelines, certain rules to follow. We have a mentorship under Andrew Holmes and Mr. Rahul Visal. So that is of great advantage to both myself as a lender as well as to my borrowers, for example, Tasha, who is online right now. So what do you do when you loan money and the borrower does not repay? Well, so that is one of the major reasons why we are all under one organization in the form of Mastery. Uh, I have first lien on the property. I've never had a borrower not repay me because by the time I'm lending my loan to a borrower, I've completely understood what the borrower is about, what the property is all about, and it is only after complete vetting of the whole situation And after getting approval from Mastery, from our gurus, that we go ahead and proceed with this type of situation. So that has never happened, and hopefully it will not happen for the reasons that I've clarified. So what are the term lengths? The duration of the loan is about 6 months. To whom do you lend? So I've also already answered that. It would be to a Mastery student. Dr. Ali lent to me as well for a property. So I don't know. Oh, AJ is on the line. Thank you, AJ. Thanks a lot. I hope it was not the most terrible experience in your life. So, AJ, can you make a comment also while you're there? I don't know. I think it must have been a terrible experience. Otherwise, you would have shared that with us.
Can you guys see me and hear me?
I can.
There we go. How's everybody doing? Yes, it wasn't a bad experience. Actually, I learned a lot. It went pretty smooth. Same process as Tasha had touched on. In my first property, and I did all the due diligence up front. And I would say everybody on, that's probably one thing that will make your lender feel comfortable if you take care of your due diligence up front. And so when I went to Dr. Ali, I was able to provide him with numbers, comps, my anticipated rehab budget, what I wanted to do, just as Tasha had mentioned, anticipated rent on the backside, and gave him all the paperwork. He felt comfortable off the jump. And then, yes, he also, I think you came out to the property as well, ran your comp, sent me your paperwork that you had just to make sure we were in the same alignment with each other. And then, yes, it all worked out. Dr. Ali funded the purchase price plus the rehab, which I believe was roughly $120,000 all in all. And so, yes, I sent your interest payments monthly to him, and then we refinanced out of it and put a regular rate on it. And so it went pretty smooth.
Right. To add to that, AJ actually is a wonderful example of an ideal borrower. He finished the project much earlier than the anticipated, term of the loan itself. And I feel very honored and very privileged to have borrowers like him, as well
I
as
think
Sasha.
from start to finish to getting it refinanced, wasn't it about 3 months all in all?
Yes. Yes.
So it went pretty fast. I saw somebody ask for a prepayment penalty. Dr. Ali himself in my project did not have one. I'm not sure where he stands personally with that now. But we were able to work it out, get everything expedited, if you would, and pay him back in 3 months.
Yeah, and to answer the concept of prepayment penalty, actually, if I get paid earlier, then I can recycle my loan, to somebody else. So I'm not particularly, I typically don't try to, enforce that pre-penalty type of situation. If the loan gets extended, then of course, we add 2 points to extension of the loan itself.
Thank you, Dr. Ali, by the way. Hopefully we'll have another one here coming soon.
Looking forward to that, AJ. Thank you. Well, I hope I'm not keeping the other panelists, from jumping in.
Okay.
So can I be excused?
Sure. Thank you so much,
Thank you
Dr.
so
Ali,
much.
for
Appreciate it.
the words, the information you provided, as well as with added information coming from Tasha and AJ. So everyone, let us hear our second guest speaker. He's from Albica Financial, Sir Vincent Pace.
Hey guys, thanks for having me here tonight. So I want to talk a little bit about what we can do and sort of touch on the theme of tonight, which is getting financing during this next uptick in the pandemic. Really in the lending space here, not too much is changing from what's going on around us in the pandemic right now. Real estate investors are still picking up properties. Loans are still getting done. You guys who have been around long enough might remember back when COVID first started in 2020, things shut down a little bit. A lot of lenders sort of ran scared, and a lot of the investors in the funds that we work with also were sort of like not doing anything. That's not happening now at all. So it's very easy for you guys to get the financing you can usually expect to get. Nothing is really too different. So we provide all sorts of financing. So sort of the bread and butter financing that we provide is typically fix and flip stuff. We can go up to 90% of the purchase price, 100% of construction costs. We certainly are not limited to funding master's students. We fund people all over the country in sort of whatever situation we find them in. We just need to make sure that students have, or the borrowers have sufficient experience, sufficient liquidity, and a good deal. Just like Dr. Ali was saying, we do end up being a second set of eyes. We have, man, I haven't had a client default for like 3 or 4 years now. So we've been doing a good job of making sure that the deals that go through are good deals. Sort of all of us here providing capital, we're definitely in the win-win game, right? Because when our borrowers do well, we do another loan with them. We're not chasing anything through, a default process. We provide long-term debt as well. Typically rates right now are high 3s at best, mostly are falling in the 4s. More marginal deals or clients with a weaker profile might end up in the low 5s. That's where most of our long-term debt is falling right now. Beyond that, we also can provide financing for all sorts of other real estate deals, commercial deals, sort of whatever you got. We're working on a new construction development in Costa Rica right now. We're working on a land deal in Tulsa, Oklahoma. But still, our bread and butter remains, the fix and flips that, most of our clients are doing. By far, by quantity, they're the most common thing we're doing. Another thing we can do that that can really help you when you're putting out offers is we can provide a proof of funds. Our proof of funds is based off of essentially your liquidity. We look at your liquidity and we say, this is how much, based on this liquidity, we expect to be able to fund you across whichever of our funds that we use to provide you capital for your financing. You can then take that proof of funds, and when you provide the offers, you can include that with the offer and say, hey, I've got a proof of funds from Albeca Financial. They might call us and confirm what the situation is. We just tell them we've got a preliminary application in from them. They've given us basic information. We've still got to confirm it. But we find that even that much information provides comfort to the seller. And we find that our clients like it a lot, and sellers find it useful as well to get more comfortable that the borrower is taking steps to make sure that they have the money they need in place. We typically can close a deal in, if you really push us, a week. But I'd say give us 2 to 3, and we're more comfortable. A little less of a fire drill. For closing in a week, stars sort of need to align. We need the appraiser to be able to get out there immediately. To contrast a little bit to how Dr. Ali does it, I will not be going to your property personally. What we do instead is we have an appraiser go there. That appraiser is our essentially eyes on the ground. They'll send us back pictures. They'll tell us the situation on the ground. They'll look at your scope of work, and they'll say, based off of this scope of work, the value when done will be such and such an increased amount. It's worth $150 now. You're going to put 50 into it. It's going to be worth $275 when done. We review their work. We confirm it. Maybe there's questions, but that's how our second set of eyes on your deal will really work. The appraisers are essential representative on the boots on the ground. We review that further when it comes back to us, and that's how we ultimately make the decision to fund, how much to fund, and so on. We do construction through draws. So essentially you need to get the work done, and then we fund the work as you get it completed. That typically means in the draw process, there'll be an inspector that comes out, and he'll look at your work and he'll say, okay, demolition, 100% done. Rough framing, 100% done. Drywall, 50% done. And we'll fund based on those percentages. If the drywall line was $10,000 and you're 50% done, $5,000 comes out to you. By and large, I mean, that's sort of the high level of what we do. We work with a lot of newer investors. So if you guys happen to be new, we have ways to help you. What happens with a brand new investor is our attention turns a little bit away from the investor and towards the contractor on the deal. If you don't have experience doing multiple deals, we'll say, okay, you've never handled a construction budget of $50,000 before. Is your contractor licensed? Do they do this kind of work regularly? So we have ways to get done your deals at pretty much whatever experience level that you have. You do obviously need enough liquidity to support the loan. That's going to mean some money at closing. There's going to be interest payments to be made, and there might be some money that you have to put out for construction before that money comes back to you through our draws. So we look at that, but we can get you done in most situations. We've seen clients who don't meet one single criteria combined together to meet it as a group. So say one person has experience, but they don't have the liquidity. They might partner with somebody who has the money, and now they have an LLC where the two of them are working together. And from our perspective, the client with two people involved now meets all of our requirements. And sometimes that just means we can get the loan done. Sometimes that means we can provide better terms depending sort of where they were standing on the classification of what funds we can qualify them for. I'm going to turn to the questions here for a second. So what is your LTV max for a fix and flip loan? So 65% is our most common number, but we can go to 70 if you've got a bit more experience, or if you're in states where it's not a judicial foreclosure. I'm thinking most of you are in Illinois, so you have to face judicial foreclosure here, which means we're generally going to be at 65. But if you're more experienced, we may be able to get you up to 75. That's typically where we are on the LTV side. Again, on the cost side, we're at 90% of purchase, 100% of construction. I'll give you my my contact info here. I'm going to put it in the chat. Got a question from Rob. What is the experience criteria? So first of all, we don't need you to have any experience to begin with. We can get that done if you're working with a good GC. Or I mean, it doesn't even need to be a super good GC. It just means sort of a normal GC, one who's done projects like the one you're working on. If you have a GC with that kind of experience, we can get you done with no experience. For 70% LTV. No, generally, if you have no experience, you're going to be capped at 65. Now, if you bring on a partner or something, that could change. But generally, a brand new investor is not going to be able to access 70%, even with the best GC in the world. Now, if that GC becomes a partner, it's another story. But if they're just a GC, they have no obligation other than completing the work contractually for you, that's not going to help you boost up to 70% LTV.
I have a question. I'm a general contractor. I've done probably 50 houses remodeled for master's students in the last 5 years.
Sure.
Does that count as actually buying any, or no? Would I still have zero under my belt?
So that would still be zero for our cheapest funds, essentially. So the way we're set up, we have relationships with different funds raised, and each of those funds has slightly different criteria. And so we try and always qualify our clients for whichever one is the cheapest one that can provide them the most amount of capital. So in our cheapest funds, where the ultimate money comes from large institutional investors, that would count as zero. And those when you're dealing with institutional investors, the box is very tight. There's no like, well, exception because actually he does have experience. No. It's just very straightforward. It's made to be black and white because, these big funds don't have time to, scrutinize all these little details. However, in some of our smaller funds are ones that we've arranged with family offices, with private investors. Your experience as a contractor is valuable. So we might not have to treat you as a complete newbie, but for some funds purposes we would. So I would say it's not going to get you as far as doing 50 deals would have done, but it's certainly a lot better than coming at it with no experience as an owner, but also no experience in construction. So it's a good thing, but not as good as being owner. The thought process there from the lender side, just so you guys can get an idea of it, is that when you're a general contractor, you do what they tell you to do. They say, I want to spend 50 grand doing something ridiculous that's never going to add value. You say, here's the change order, I'll do it, right? But when you're an owner, you make a very different set of decisions there. So that's why there's that line between being a general contractor and being the owner of a deal. Now, obviously, being a general contractor is not without value. You know how to run a project. You're not going to get stuck on contracting issues, which are some of the biggest things where people trip up on these deals. You've got lots of experience with that. So it's not worth zero either, but still not quite as good as being an owner of a project.
So if you're a general contractor / owner, how do you guys do that?
You'd qualify from the owner side on its own. So the general contractor is sort of icing on the cake at that point. But if you're the owner making decisions of an owner, it's sort of it's almost irrelevant that you're also the general contractor, although it's not a bad thing. It's perfectly fine.
So how do we apply for your loan process? I want to get pre-approved. I've seen some things on that I'm interested in that I want to be in a position to finance within the next 30 days.
Sure. So I'm going to put into the chat our prelim app, what we call it. It's just a place on our website where there's a form there, and you fill it out because there's basic information on you, basic information on the project. If you don't know the details on the project yet. You can give us just the numbers you think you're going for, right?
I actually submitted one when I initially joined the deal makers, and I haven't gotten any response back from Albica.
Let me look into that. That's odd. I'll check and see what happened there. Sorry, I don't see your name here.
My name is Roy.
Roy? Okay.
Yes.
Let me just note that down here. Check for Roy.
Last name Mines, M-I-N-E-S.
M-A-I-N-E-S?
M-I-N-E-S.
Got it. All right, I'll follow up on that right after this session. But yeah, you fill that form I just clicked there. It's got some basic questions on your financials, the deal. And again, if you don't have a specific deal, you can just put in what you think the deal is going to look like. It's going to be in Chicago. I don't know the address. Probably 100 grand, probably 50 grand in construction, probably 225 resale, whatever it is. You put it in there, we can base it off of that.
Vince, I missed the beginning of your presentation. Are you acting as a hard money lender with the high interest and points?
Well, depends what you define as high. I mean, our rates can go as low as the high single digits. And for very ugly deals, I mean, sometimes it's the mid-teens. Like, you know, when we help someone out of like a foreclosure situation, you know, the capital sources we have for that are not cheap. You know, it's a risky situation, and essentially that is earned in compensation. Most of our loans probably fall in the low double digits, 10s, 11s, 12s, things like that. More experienced clients can get down to the high single digit or more profitable deals also. But that's usually where we're going to fall. So if that's high, you know, that is what it is.
And no points, right?
Oh, no, we charge points. Usually it's 2 to 3 on most deals. Sometimes it can go lower on depending on the fund we're using, it can also go higher. You know, if we have to use, again, if we're at a fund where we're dealing with like foreclosure, bailout, things like that, it definitely goes higher. But for the average deal, you're probably looking at 2 or 3.
Okay, thank you.
Rob, to answer your question about the foreclosure situation, usually what we do is we find a way to refinance the deal and just sort of get them back on their feet and out of the problematic situation they were in with their previous lender. It's really deal specific depending on what the situation is, and usually those kinds of deals will ultimately land on my desk for me to help figure out exactly how to handle it. But we do have some good small private funds that are willing to take those kinds of risks. And essentially those are funds they say like, look, we like the asset enough that if this guy can't pull it together, we're okay, you know, taking it back and living with that. The goal is never to do that. The goal is always to help the client, but you've always got to be underwriting to that sort of thought, especially when you're already dealing with a problematic loan. Ernie, I've noted you down as well. I'm going to check on you right after this call. Rob, you have a two flat fix and flip opportunity. Great. Yeah, if you want to submit that into the form I just linked, you can we can get your proof of funds on that. Do you have cash out refi products? What are typical terms? Yes, we do have cash out refi products. Terms can go up to 75% of the value. The rates are going to be similar to what I was describing before for the long-term products. So 4s are normal right now. We see high 3s on occasion. Just had a quote on that earlier today. Sometimes we will hit up into the low 5s right now, but that's on a marginal client. That would be a lower credit score, tighter debt service coverage ratio, which basically means how much income the property is bringing in relative to how much you have to pay for debt each month. The terms range from 5, 7, 10. Those would be ARMs, adjustable rate mortgages, to 30-year fixed. So we've got a variety. Typically, 30-year fixed is a little more expensive than the adjustable rates. So there's some real variety there in terms of the terms you can look at. What makes the cash out rates vary? It's going to be your credit score is probably the biggest one. Your experience plays a factor. The debt service coverage ratio of the property plays a factor. Some things inherent to the property itself, like the velocity of the market. So that means how quickly things sell in that market. The rental market there. So it's really sort of a multivariate analysis. The things you control the most really are your experience and your credit score. The other things are more or less inherent to the property and the situation in the market. So our refis are not conventional, they're commercial. We only do commercial lending. All of our capital sources are private sources. We work with banks as well, but we're not doing conventional with banks. When we work with banks, we're working on their commercial side, and we're using our banking relationships to get our clients some good debt. Right now, our best capital source for 5+ multifamily units happens to be a bank. So none of our private sources are getting as low. We're getting rates still in the 3s, even in sort of the worst case scenario, high 3s right now from that bank source. So if you got a 5+ multi, and you call me up, I'm not going to try and take you through one of our funds. We're going to work with one of our banking relationships because that's the best capital we have for you right now. Jonathan asks, what is the length of the terms? So that depends what you're asking about. So on our short-term debt, we're typically a 12-month term. After that, it's usually extensions are 3 months, typically 1 point for 3 months. Although in some of our funds, we can actually grant you one free 3-month extension if you're current up to that date. If you're talking about our longer term debt, we have 5, 7, and 10-year adjustable rate mortgages, and then we have 30-year fixed. So the adjustable rate mortgages obviously switch to adjustable after that fixed period, and they go on beyond that. But most people will aim to refi out of them at that point. So we've got sort of all the different terms that you'd likely be looking for. If you're looking for something sort of in the middle, 18 to 24 months, we have some options there, but we'd need some explanation there because typically for a residential property, that's a rare thing when you need it. Maybe if you buy a historical property, we know the historical board takes forever. So there are some situations where it makes sense, and ultimately, we'll look at it sort of with common sense. We see these deals all the time. So if you're looking at one that really is going to take 18 months, we're not going to force it into a 12-month term. How do you determine credit scores for a multi-member LLC? So depends on the financing you're going for. For short-term capital, we're typically, a fix and flip loan, a year, we're typically going with the highest. So whoever's got the highest, that's what we're going to look at. Long-term debt's different. Long-term debt, we're often going to look at the lowest. So it sort of creates a situation where people who have low credit scores can do flips if they partner up with somebody fairly easily, but it's more challenging for them to do long-term financing. At least has an owner. We've had some clients restructure things such that instead of being an owner in the long-term debt, they have a contractual relationship. So they might have a profit-sharing agreement with the actual owners who meet the credit score requirements. There's some ways to structure around it, but they do change the risk profile a little bit because now a person who was going to be guarantor with you, now they're the sole guarantor, and you just have a contractual relationship with the entity that's getting the loan. That can be tricky stuff, and if you got anything like that, we can sort of help walk you through it to try and figure it out. But there are ways around some of these limitations if you're able to creatively structure things a little bit. Cash out refi are not DSCR based non-recourse loan. Brian, I'm not sure I get the question exactly. There is a debt service coverage ratio data point that we look at in cash out refi. They're generally recourse on the 1 to 4 rentals. There are non-recourse options when you get into larger multifamily buildings. But for the deals that most mastery students and most at Chicago are using ChicagoDealVault are looking at, they're typically 1 to 4 resi. Sometimes multifamily come in, but for those, it's typically always recourse. You might be able to get non-recourse if you have a big portfolio of them, but most of these loans are going to be recourse. And for those of you who don't know what recourse means, it just means you're providing a guarantee. So it's recourse to your personal assets at the end of the day if it needs to get there. All right, I think I answered the questions here. Simon, I see your messages and I will respond to you. Just going back up to make sure I caught it all.
Okay.
I think so. So if you guys don't have any other questions, I think I will turn it back to the host and we'll hear from our next speaker.
What's the
Yes.
payment penalty on a 12-month regular beginning loan?
So for most of our funds, there's no prepayment penalty. And in some of them, there's a minimum interest that needs to be paid of about $4,000. However, our clients almost never pay less than that anyway, because that would basically mean you essentially need to pay something more to hit that minimum. You would have had to essentially wholesale the deal in 1 or 2 months.
Okay.
So that I think I can count on my hand the number of times that's actually come into play. So pretty much on the short-term debt, there's no prepayment penalty that you need to worry about.
All right. Thank you so much for the kind words and for giving us a lot of information about the idea on having loan with Albica and how to apply as well, Vince. So in case you have questions to Vince, you can also reach out to him. He provided his email address on the chat. So today, I would also like to introduce to you our third guest speaker. In behalf of Juan Loya of Homebridge Financial Services, we have Karen Ziska. Hello, Karen.
Hi, everyone. How are you? So thanks for having us. I greatly appreciate the opportunity. And Juan, unfortunately, is on a beach somewhere with a cocktail in his hand. So he asked me to step in for him. Many of you I've talked to and have met along the way. And Roy is currently doing a loan with us now. Hi, Roy. So Homebridge Financial is a residential lender, and we have a solution for investors that do a debt coverage ratio for long-term fix and, or rather buy and hold properties. So there's a couple of different things that we can do that we help investors with to help grow their portfolio. If you are getting financing from a hard money lender, and you need to do a rate and term refinance, we have a product that, as long as we can show that you've had 1 year of rental experience, we can do an 80% LTV, and the debt coverage ratio that we need is $1. So we just need to show that the rent is $1 more than what your new payment will be. We use the lowest rent by either the appraiser or your actual lease that you have. Now, the benefit with that product in particular is going up to an 80% LTV. If you are taking advantage of short-term financing where you're buying it, fixing it up, you're putting equity into that property, there is no waiting period. So if you do a cash out refinance, we do have a seasoning period, and we're looking at a max LTV for a cash out at 75%. So if you currently do not own a home, one benefit that we have is you can actually do a house hacking scenario where you're starting off your portfolio by purchasing a multifamily property and hold on one second, Rob, where you could buy a multifamily property as a primary residence, put 3.5% down, and then you're able to move into that multifamily as an owner-occupied property. So the term for the lease, we have to show that you've had 1 year of rental experience at some point in your life. The lease that we require when we're refinancing it, if you have a 1 year lease on the property, we need to see it. If it's vacant, and hi Ernie, and if it's not rented as of yet, we will use market rent. So, and the appraiser will determine what market rent is. Does that answer the question on the requirements? If not, let me know in the messages. As far as a prepayment penalty, you can actually opt out of the prepayment penalty. If you do choose to have a prepayment penalty, like let's say you're doing a 1031 exchange, you know that you're going to hold this property for at least 2 to 3 years. If you want a lower interest rate, you can choose to add a prepayment penalty onto that property. And Tasha asked how long is seasoning. If we're doing a cash out refinance for a brand new property that you purchase, it's 6 months. If we're doing a rate and term refinance where we're paying off a hard money lender like Dr. Ali, in that case, then there would not be a prepayment penalty because he's lending you the money to buy it and fix it, and then we're just refinancing and paying him off. And okay, so I was reading Tony's scenario. So interest rates, we're typically about a point below what commercial financing is. And our product, we can lend in every state except Utah. So this product is available if you are buying in any other state. Our team can help with that. From start to finish, it typically is about 30 days to get the loan closed. The documentation that we require if you're using the investor loan is relatively minimal. We're not looking at your tax returns. We're looking at bank statements to ensure that you have reserves. I'll type my current information, Andy. My name's Karen. So the cash reserves for this loan are 6 months for the subject property. We are not looking at any of the other loans that are in your name as far as reserves. With this loan, you can do it in your LLC or in your personal name. The downside to the loan, the minimum loan amount is $100,000. We're looking at obviously numbers that are above that. If you're purchasing, again, it's 80% LTV if you have good credit, and if you're doing the cash out refinance at 75% LTV. Minimum credit score is 620 for this program. If you are doing a house hacking scenario where you're buying a multifamily property and renting out the other units, minimum credit score is 580. With that product, you can do a renovation and you can purchase it plus renovate it for the 3.5% down. That is with an FHA loan. So you will pick the contractor and you pick the finishes. And if you have rental properties that you're looking at, how do you structure it to get the equity out of those rental properties so you can continue to grow your portfolio? Let's have a talk because we can help you to structure up that portfolio. You do not have to be a mastery member to exclusively work with us. We are a residential lender and work with everybody and anyone that's credit worthy that comes to us. And let me give you my information in the chat. And is there any other questions that anyone has that I may have missed over? Oh, we do have conventional loans too. If you want to buy a second home, just need a regular conventional loan, we have those also. You can do a conventional home style renovation loan if you find a property that you're interested in and want to put as little as 15% down. So it's 15% of the purchase plus renovation. If you're in a bind and don't have a private or commercial lender that you can get money from, we do have that option too. No, so the house hack loan is a full doc loan, and that then we are looking at your bank statements and pay stubs. We do have options if you are self-employed and looking to get a loan that just uses bank statements, or if you're a 1099 employee, we do have loans where we do look at 12 or 24 months bank statements, or 1 to 2 years of 1099 income, and that's how we calculate your income and not use your tax returns. Otherwise, if you wanted to do, if you wanted to do one of those loans, you can buy a multifamily up to, the loan limit on that product is up to $2.5 million. As far as new construction bridge loans, we do have a new construction product. I'd say we do them. It's a lot of paperwork, and it is for owner occupied only. If you're looking for new construction for investment, I do have a referral that I can give you. Manufactured homes, is it on a foundation? Is it a prefab or is it a, so if it's on a foundation, and it depends on who your manufacturer is. If it's being delivered on site, and financing is when it's complete and it's one draw at the end, yes, the new construction can be done that way. If they are requiring draws throughout the process, no, we are not the choice for that. I would ask your prefab manufacturer for referrals. They'll likely have a couple of banks. Yes, you could do a second home with 10% down out of state, yes. And I would suggest highly, if you're looking at, Brian, at buying a second home, do it quick. FHFA sent us a release yesterday that come March, they are increasing second home rates by 3.5%. So it is worth looking at doing that now rather than later. And we do have a lock and shop option. If you are looking at a second home and want to lock in interest rates, you can do that while you're out searching. We just have to close prior to March when that rate increase is coming in. And Roy can attest, if he's still on, to kind of our processes and procedures. We do have a full team that handles your loan from start to finish. And, you know, we definitely work with our buyers to help educate them along the way on how to continue to grow their portfolios, how to continue to get liquidity, and how to best use these loans to your advantage. Is there anything I'm missing, Roy, in the process?
I don't think so. I think you covered it very well, actually.
Okay. And you can find me, just Google my lender Karen, and I'll come up, and then here's all my contact information. That's it, unless anyone else has any other questions.
I just want to say, Karen and I worked together on a couple deals. Very tenacious when it comes to getting me the best rate possible, helping me out with some difficult circumstances. I found myself in with some short-term lenders. We're currently working on the second deal, which I have basically a recalcitrant short-term lender who's not providing me documentation that I need in order to refinance the loan, but they've been patiently waiting. Karen's team has been patiently waiting with me to get what I need in order to continue with this refinancing. I am hopefully going to refinance that property and be in a position to buy other properties within by the end of this month, I would say, or about February. So full steam ahead. Thank you, Karen.
No problem. Rob, as far as a blanket loan, send me an email. I can ask Juan. He'll know of lenders that have some blanket loans. Keep in mind, look at the terms of your blanket loan very carefully. One thing that I've run into with a few investors that have done them, the verbiage in the loan itself generally requires that if one of the units leave the blanket, it has to have the whole series refinanced at the same time. So keep that in mind if you're going to do a blanket loan for multiple properties together. Make sure that you plan on either keeping them all together or selling them all together, and not looking at taking liquidity out of any of them, because you have to refinance the complete package generally as they sit. So don't fall in that rabbit hole that a lot of investors fall into, where they're kind of stuck. But they're good as long as you know what you're getting into to start with.
We can help on blanket loans if you have a need there. Most of our blanket loan programs aren't going to, it's going to be partial releases. So if you buy 30 properties and you want to sell some, we can help you with that. We have a client right now who's a wholesaler who's taking advantage of that. And what he's doing is he's buying packages of properties from various situations. And then each time he sells one, we just give him a partial release to represent that property's portion of the loan. So it's fairly straightforward, I think.
That's great. And it's great to have that source to go to Vincent for that, to be able to have that partial release, because I've had quite a few people that get stuck in that, and it's a detriment to their portfolio. Yes, there is a limit on how many. So if you have loans, Brian asked if there's a limit on how many loans that you can have. If the loans are in your LLC and not in your personal name, you can have as many as you want. In your personal name, their limit is 15. Now, if there's nothing else, I guess I'll turn it back over to you, Phil. And, if anyone has any questions, just reach out to me. Either myself or a member of my team can definitely help.
Sounds good. Karen, one last, let's say, suggestion. Do you have another advice to our lenders or attendees today, as well as with Vince?
The biggest suggestion that I would give to any attendee is take advantage of the guest speakers and ask us questions. There's no obligation. We are all here to help. We all have different products to get you to your end goal, and really sit down and put together a plan and stick with that plan. Don't follow the shiny nugget. Put together what works for you, because what works for you is not necessarily what works for the person next to you. And you need to have multiple avenues to get liquidity for your investing needs.
Got it. Thank you so much, Karen, for the details and the information, as well as with your advice. How about you, Vince?
I think Karen nailed it there. I'm just going to reiterate what she said. There's a lot of good resources here, amongst the various panelists. Reach out to us. We can help you, and if we can't, we're going to tend to point you right around to other panelists and other people in the space that we think can help you.
Okay, sounds good. Well, in behalf of Chicago DealVault and Hugo, we are very glad to have you as guest speakers from Dr. Ali, Karen, Vince. It has been great, and this kind of topic is very helpful to us, and I'm pretty sure our attendees will add you on the list of sources for funds and their properties. Now, allow me to also share with you a little bit about Chicago DealVault. I can share to you about Chicago DealVault at least 1 to 2 minutes. Let me just share my screen so that you'll be able to have an idea what Chicago DealVault is all about. So in this chat, I also shared to you about how you're going to avail 30 days free trial for Chicago DealVault, as we are giving 30 days free trial. And this is how Chicago DealVault you look like. You will have access to MLS, Power Search, My Deal Alerts, off-market properties that we categorize into probate, pre-foreclosure, upcoming auctions, bank-owned, shadow inventories, and all that. So for the list of properties, for example, pre-foreclosure, we list them in this manner. So currently we do have a lot of pre-foreclosure properties. This is how you're going to see for a pre-foreclosure property. We have the number of beds, the comps. You'll be able to do your analysis for the properties, make use of the rental calculator, flip calculator. So if you're going to reach to a private lender, we also generate a report for you. So usually the private lenders or hard money lenders would require you to ask for a report about the property. So we can do that for you. All you need to do is to click on this generate report button, so that you'll be provided with a file coming from the system about how about your property, about the details of the property and your analysis. So again, I'm not going to take you for long. This is Chicago DealVault. We are giving 30 days free trial access. So in the chat, we provided to you how you're going to avail the free trial. And aside from that, we also would like you to be aware of our mentoring programs. We have the Cash Flow Inner Circle and the Wholesale Inner Circle. If you're interested, I also posted that in chat. So once again, everyone, thank you so much for joining to today's presentation. Feel free to reach out to us if you're interested to be a part of Chicago Deal Vault. You can either send us an email to support@chicagodealvault.com or text message to 312-765-7733. And again, my name is Phil. To our speakers, to our attendees, thank you for being here tonight and for attending our webinar. So enjoy the rest of your evening, everyone. Bye-bye.